I think it worked.
Okay, hello everybody, and welcome to another episode of The Cackle. This is where we meet with Midwest change makers and connect the dots between economic trends and the lived experiences of people navigating them. I'm Emily Heinz. I'm the founder and managing director. Forgot my own title for a second there. I was like, I made it up anyway, so.
It'll be different tomorrow.
You're like, it sounds great. At Entry Point, we partner with economic development organizations and nonprofits to foster inclusive and vibrant communities across the Midwest using research and community-focused programming. If you want to check out any of our research on the startup or small business community, you can go to entrypointmi.com. We just give it all away there for free. And if this is your first time joining us, welcome. And if you're a repeat cackler, we're glad to have you back. And today is super exciting because we are talking to Ben Bernstein of ID Ventures. And he is so great. How are you?
I'm great. How are you?
I'm doing pretty good. I feel
good to be here.
Just crazy during the pandemic, but I feel like kind of spring is in sight. So it's
that crazy is now the new normal, though. We take that crazy with us, and and it's just now something we have to deal with.
I know. I'm starting to think through strategies for relaxing and stuff. Okay, do we start getting babysitters more? Do we start going out to eat more and things like that? So I'm like, But okay, wait, I want people to kind of know who you are first before we start chit-chatting too much. So
sure.
Tell a little bit about your background and kind of your journey within the entrepreneurial ecosystem, and then how did you get into venture capital?
Sure. So originally from Los Angeles, went to Princeton undergrad, and then from undergrad straight to Wall Street. I was an investment banker at UBS, doing consumer products and retail, kind of typical corporate finance, M&A, capital raising strategy stuff for large consumer products brands and retail companies. I did that for 5.5 years, from 2008 to 2013. And then pivoted a bit of, from a career standpoint into venture capital after that. So I went to a fund in New York also called the Partnership Fund for New York City. That was, we can get into this, but it's kind of similar to IDV in terms of, everyone's confused about what we do and if we're connected to some sort of public entity or not. But also just early stage, kind of job creation, economic development, and kind of maintaining New York as a hub of innovation kind of mission. And that brought us into all kinds of different industries, but mostly kind of seed and Series A deals. I was there for 2.5 years. That's kind of where I learned how to do venture capital, very different from investment banking. And it was just a great experience in terms of just kind of learning a different, kind of type of capital, different way of doing business. And from there, I went to a startup. I was the 11th employee at a pre-seed fintech company, doing, kind of crowdfunding adjacent type work. I left that company after 1.5 years to go to a post-exit consumer services company. So it was like Uber for house painting. And so I got the early seed, pre-seed, the post-exit. I don't have any experience in the middle, but I did get the kind of the pulls of the kind of startup experience. So I ran partnerships for that company. And that is about 10 years in the game, and at which point it was time for me and my family to leave New York. That brought me to Michigan. I settled in Ann Arbor about 2.5 years ago. My first job here was trying to start a new fund or fundless sponsor, some sort of entity to invest in minority-run businesses, kind of in a private equity type model. Learned a ton, but it eventually didn't work out, mostly because of, kind of mistakes we learned along the way, but also COVID. COVID, kind of shut down, funding and some of the acquisition opportunities that we were kind of had in the pipeline. So then I went to Patty Glaza and Martin Dober, the amazing MDs at ID Ventures, and said, hey, I'm looking for my next thing, and kind of brought me back into the venture space, so I've been there for it'll be a year in, let's see, it's the 12th. It'll be a year in 6 days. So I've been,
Yeah,
so I
it's
joined it
crazy because you joined during the pandemic that I was
during the pandemic.
like, oh yeah, like Ben is like newer to the ecosystem. I'm like, I guess he's not new anymore. We've all just
Yeah,
like
I,
inside.
I can't get that. I get away with that anymore because we've like, not only am I not new, but I've also like, we've hired like newer people. So
Yeah.
like I'm not relatively or absolutely new in this job, but it does still feel new because it's been through the pandemic. And I feel like, I've done 99% of my work from this room. And part of venture capital, I think, really is making personal connections and meeting people and getting out there and being on the go. And
Yeah.
I haven't been able to do that in this role. So it does feel like there is still kind of white space ahead for me, to do that part of the job. But yeah, it's been great kind of being back in this seat and working with, kind of local entrepreneurs and, learning more about the Michigan ecosystem and the talent that's here. And so kind of year one down, and it's been awesome.
How did you like going to Princeton? I feel like that seems very fancy.
It is. I mean, I have the little
Yeah,
logo.
it is fancy. I mean, like,
It
I'll
is
tell you what
fancy. We
Michigan
have a
State is
whole,
like after.
yeah, we've got a whole crest. No, it was different for me coming from, well, so I went to an all boys Catholic high school. So just
Okay.
being in more of like a, mixed educational environment itself was new and different, but obviously in a good way. Like, it's good to hear from different perspectives and more diverse backgrounds. So, when you kind of limit yourself from like literally half the population, and then you are now, put in the same
Yeah,
rooms
that
with,
would be because you went K through 12 with only boys and all
not
that.
K through 12, but high school, which is,
Okay.
um,
I was like,
was,
what?
that
All of
would
a
be,
sudden,
yeah,
the
that would
interview
have been
is
a lot.
only about that. Like, how does that work?
Let's talk about that. No, but it was still different to kind of, be in a more, higher learning environment with, a more broader section of the populace. And then, I mean, it was different being away from home, far away from home. It was different, being, kind of in those elite spaces where there's kids coming from, these boarding schools that are older than America, and kind of bringing that, like, just feeling more natural in that environment, versus just kind of me coming from what just felt so germane, like my upbringing, and then kind of being thrown into like this kind of elite space. It was definitely different. I will say that Princeton was an incredible 4 years, and there's within that community there's little subsets and places that you can kind of find your way and make an impact, and whether it's through the social scene or through volunteerism or just having a job on campus or something like that. There was little ways to kind of find your people and kind of grow your network and grow yourself. So I do look back on it fondly, and Princeton does keep its hooks in you, in more than just asking for money every year, but they do like they do like there's that, right?
Let me like, you should be rich now, right?
Yeah, now's about the
You're like,
time for rich money, please.
yeah.
No, no, we do, like, so most, like, if you go to the Big Ten, you go back to homecoming every year. For Princeton, it's a reunions at towards the end of the year. It's kind of tied in with graduation. So there's a large cohort of people that go back every year for reunions, and when you're in New York, it's like super easy. It's like an hour train ride. So
It's
so I
funny
think
because I don't even know where a lot of Ivy League schools are located. I just imagine them to be like Hogwarts, like they're just
yeah.
somewhere, but you don't know where they are.
Well, Princeton's best kept secret is that it is in New Jersey. So that's not, it's not anywhere on the crest or anything in the like marketing materials, but it's like, oh yeah, Princeton, New Jersey. And so yeah, it is easy. It's easy to go back. And that's kind of been like a nice touch point to keep in, to kind of have that, go back, see people that you haven't seen in a year,
Right.
do the like update. Oh, what are you up to? Oh, cool. You have kids now. Great. And so there has been, yeah, I feel like they do a really good job of kind of keeping the alumni engaged, beyond
Yeah, that is
graduation.
really, and it seems like there must be a lot of like really fancy people that like went to school there and now are like, oh, it's this guy that he's like a famous guy now. And
There's a little bit of that. It's funny. There was, we had Patty, I think, is on the board of VFA, and we worked with VFA getting analysts and stuff. And she's like, "Oh,
oh
they have
yeah,
this new CEO. She seems young." And I looked her up and it's like, "Oh, I went to Princeton with her." So you do get those like, oh, there's now those there is like generation, I guess, of leadership that's kind of that's in my generation now that I'm seeing people kind of hold these positions, which is great. It means I'm getting old, but it also means that that I don't know. It's like our time to impact things.
yeah. Wait, didn't we determine like a couple of months ago that we're like exactly the same age? So
We're close, I think.
we're ending this interview. We're like, I'm getting old, and I'm like, oh,
Oh man,
what are
I
you
just
talking
called
about?
you old.
We also determined that we actually are sitting like half a mile from each other,
Yep.
which
Yep.
or probably less, like a quarter mile, I think. And so I think that's also really funny that we're both sitting on our computers, like you're like right over there.
You're right. You're right down there. Yeah, exactly.
We're nerds. Okay. So you're from LA and you spent a lot of your career in New York, and
Hmm.
now you're in the Midwest and you kind of have been here. Like, what are some of the differences? And they don't all have to be like positive. You don't have to feed me positive things about the Midwest, but like, what are some of the differences you see in the entrepreneurial ecosystem?
Yeah, that it's a good question, and I think there's just some things that you just can never like. New York just has like an inherent competitive advantage, amongst almost any other region. Like when you talk about entrepreneurialism, there's just a bevy of talent of ex bankers, ex consultants, ex lawyers, that want to that are kind of beleaguered and sick of the system. They want to go start their own thing, be their own boss, and like it just kind of creates this talent pipeline that can either kind of help grow companies or start their own company. So
Yeah.
just the fact that New York is New York, it attracts talent, either people that are entrepreneurial or people that have like incredible technical backgrounds. You just get that in spades, and it's hard to kind of concentrate that in the Midwest anywhere. Obviously, there's great things being done in Chicago. We love what's happening here locally in Detroit, but New York is like a different order of magnitude in terms of I need to build a company and staff it with really, really smart people that are talented and driven and want to be here. That's like a non-starter. I mean, or it's just something that is inherent to New York City. So that's one thing. Um, I would say that the Midwest definitely. So the coasts have. I think because of that talent pipeline, it's easier to raise capital, and then it feeds into there's more capital there to be raised, and you have all of the funds there. And I wouldn't even slight the idea that New York City is just a tiny island with people living on top of each other. So it's just easy for an industry like venture capital and entrepreneurism. It's just easy to get around and go meet somebody or just kind of be in touch with someone fairly quickly versus being in more of a commuter city and having to kind of this is all kind of pre-pandemic
Yeah. Yeah.
frame of reference, but still, I think that um, that just closeness, definitely feeds a lot of that energy and a lot of that just ability to get things done quickly. So that's another kind of, I think, advantage to New York.
What do you think? I was just talking to somebody the other day that was from San Francisco about this, but I know I've seen like so many articles recently about like, oh, people are leaving these like higher cost of living places. And like, I know people in the Midwest are like crafting all these programs to kind of try to attract that talent. Like, do you think or do you know people that are kind of like, oh yeah, New York City, sitting in a New York City apartment with two kids, trying to work remotely is like too difficult, and like then they're thinking about moving to other places, or
Yes.
kind of just something
So
we tell ourselves.
I think in my in my personal network, there have been several people that, so like we had our first kid when we were still in New York, and that was, we just kind of outgrew our apartment and outgrew that kind of stage in life where we needed all of that. Like New York is very accessible, right? Like everything is at your fingertips, and we were just like, actually, we just kind of need, we have our family unit, right? And that's what we need, and we need to nurture that. So that's why we left. So I think there's a lot of people that are kind of getting to that stage or have gotten to that stage. And then when you kind of experience a pandemic and, the ensuing kind of shutdowns of businesses and arts and culture, then you're wondering, okay, now what am I really doing here? So folks have, kind of left to the suburbs and surrounding areas, gone home where they grew up to settle down. So I'm not saying that this is anything more than, anecdotal evidence from like people that I know, but there has been, like, I think if you were looking to leave the city, then this definitely kind of spurred that on. If you were kind of, suburb curious, then that kind of got you out to the suburbs to like, oh, let's rent this place and see if it's for us. That's not to say that, New York is dead or that it's not coming back. But I think if there was like, two working parents and small children, it definitely makes a lot more sense. It might make a lot more sense for them to try to just get more space and take a little bit more control over the options versus being in the city and kind of having to be at the whim of what's available.
Yeah, that makes sense. Yeah, I talked to somebody who had a dog and two kids and like two spouses in the beginning, like trying to work full time, and they were
Yeah.
just like, yeah, this isn't gonna work out for very long. I was like,
I
yeah,
mean,
that sounds terrible.
we've got two kids, a dog, and I try to get like through the day without, massive disruption. It's
Yeah,
like
I
it's
can't
hard
even
in
imagine
in
if
a
you lived
house.
in an apartment with
Yeah,
like just like 2 bedrooms trying to. Oh, the pandemic. I'll
yeah,
ask you a question about that later, but I want to ask you more about venture capital first.
yeah.
Okay, so if you can, well, obviously you can, but like if you could describe like what venture capital is, just a tiny, tiny bit, like a brief, like for people who are like, I don't really even get what this is.
Sure. It's early stage investments in high growth or high tech companies. So we are not, venture capitalists do not buy out the company. We do not take ownership we do not take majority ownership of control generally. We are placing small bets in founding teams that have the potential for outsized returns and high growth. So us as a seed investor, we might be part of a funding round that is only taking 10 to 30% ownership in a company, and as an individual investor, in a potential syndicate that's leading that round, it might be even smaller, 1 to 5%. So yeah, so we are definitely not. We are backing founding teams to grow these companies instead of buying them out and kind of putting our hold on on the future of the business.
I one time saw a Khan Academy on venture capital, which I love myself some Khan Academy. Like that guy's so smart. He knows everything. So if you ever want to like look up venture capital on there, but he had this good example of like Socks Online. So if you start this company, Socks Online, and like starts out with like the owner owning 100% of the company, and then if they go to a venture capitalist, the venture capitalist will give them money to kind of like grow their company and hire more people and buy more computers, he said. And
Buy more
then
stocks.
yeah, more material for socks, which they're being sold virtually. So it's like a high growth company for socks. I don't know, like Bombas, I think is
I'm thinking Bombas right now.
yeah,
Yeah.
exactly. I was like, so Khan Academy, is his name Khan? I think it is. He probably started Bombas. So anyway, venture capitalists will give you like however much, like 150,000 for like a portion of your company. And then as the company grows, that portion is worth more. So then when you get your money, so when like the venture capitalist, like when the company grows and gets money from somewhere else and the venture capitalist kind of gets their money back, their money's worth like that percentage that they just purchased of the company is worth so much more that's how they make their money.
Right. Like,
So
and
I was like, oh man, okay. And I was like, stocks online. Okay, I got it.
it's a good, I mean, it's a simple example, but it makes sense because it's like if you want to start a business and you are wary of venture capitalists because I think just in the general kind of spectrum of news, finance is kind of often dumbed down, and venture capitalists can be lumped in with private equity people because they both collect carried interest, and there's just a lack of
Yeah.
nuance with that kind of way of how the news is reported. So if you were to just say like, oh, I don't want I don't want to take on any venture capital, that might be a helpful exercise. Say like, oh well, yes, your ownership goes down from 100 to 90, but we give you the capital to grow the value of your business so that you
Yeah.
now don't own $100% of a $1 million company. You own 90% of a $10 million company.
Yeah,
So which one would
exactly.
you rather have?
Yeah. Oh, that's how you get the deals done.
That's how now
Which
this
one
is
would you
This is
rather
now Ben
have? You're
Academy.
like, that sounds great.
Sign me up.
Yes. Like, what are the rest of the terms? Oh, never mind. Just sign right here. um, everyone's like, oh no, this sounds scary. Okay, so then how do you go about like finding the companies to invest in? Do they like come to you, or like what is like your sourcing strategy?
Yeah. So this is interesting because I'll tie it back to the like New York and Michigan ecosystems. I feel like the so yeah, we are at ID Ventures, we're pretty we get both. We have a broad network of friends and people that that are talented or know talented people, and send them our way. People that we've either co-invested with or run events with or programming, and they're like, well, IDV is a good person for you to pitch. So we get that, and then we go to other events and pitch competitions and try to meetups and try to stay as attuned to what's happening in the ecosystem through some of those kind of hubs. So I would say it's about 50-50 in terms of whether a company finds us or whether we find a company. But it does take effort to both manage that pipeline and to be as kind of active to keep our radar out for what's interesting.
Yeah.
And what I've seen that the companies are different in from New York is that I feel like there's a little bit more scrappiness in Michigan or in the Midwest because of the lack of capital. There's just less places to go raise money from. The lack of like we said, the talent disparity. Not again, it's not that there's not talent here, but it's like compared to New York or the Bay Area, it's not lousy with talent of just people that are just kind of ready to plug in, and you need to be a little bit more judicious about who you're bringing onto your team. So I feel like the founding teams are kind of taking on a little bit more early responsibility and pushing things as far as they can go before they need to hire, for a variety of reasons, right? Because A, they haven't raised any money yet, and B, they may not have found the right talent to bring on anyway. So there's a little chicken egg going on there. But I feel like it just that whole dynamic just breeds these founders that are just a little bit scrappier, a little bit ready to kind of put in that extra effort. This is no slight to New York founders. They're great, but I feel like there is just there's a little bit of like that, just that fighter, that scrappiness of the Midwest founder that I feel like is obviously goes towards that type that you as an investor you like to see, right? I want to see someone that's going to put in the blood, sweat, and tears of founding a company, which is really, really hard, and that just needs capital, but be, just some guidance and some, just another perspective, and someone that can just kind of help them navigate hard issues, and get them on track to succeed.
Yeah. I wonder, it would be nice to see if somebody did like a study at some point on like whether that like scrappiness factor like helped companies sort of during the beginning of the pandemic when they needed to kind of figure out a new way of doing business or something, if that like helped them, or if it did, if there's kind of no difference between like New York, New York City and Michigan, for instance, just because like maybe the infrastructure is so built out that the resources were just like, even if they weren't necessarily like as scrappy, like they didn't really need to be. So they were kind of like, yeah, here you go. Here's all your
Yeah.
resources. You're like, oh,
Yeah, no, I
thanks.
mean, it would be interesting. Our experience through the pandemic, and I was basically there to like at the beginning to see the pipeline and the types of companies that were coming through. I mean, yes, people pivoted, lots of businesses struggled, but we deployed like a record amount of capital during
Wow.
2020, in the midst of all of that, and grew the portfolio by, by some margin over the year before. So we continued to see really, really strong companies. Companies that took advantage of the pandemic in certain ways in terms of being able to provide new technologies, to a to new markets that were now kind of asking for, a new way of doing business, as well as people that were just generally not affected and used it to their advantage of like, oh, well, now we don't need an office anymore. So that's one less thing on the P&L. So I feel like that we still, and then there were the folks that were like, things were going great, and we need to raise some money to make sure that things can continue to go great because of all of this uncertainty. So there
Yeah.
was a spectrum, but I feel like on the whole, we were pretty impressed with the businesses that came through, in the midst of everything that was going on.
Yeah, you guys are like, whew, that there's like some people that I saw that were like, oh, like it's the pandemic, so we're gonna just like chill out for a bit and then we'll see how 2021 is. And then like
Sounds nice.
then there was like the other ones that are like you guys where they're like, oh, it's a global pandemic. Okay, well, we are gonna be going crazy then because you guys, I think, made like 70 investments in probably more than that because I think
Yeah,
I only see the ones that are like in like venture backed companies, but you guys also run a number of other programs that are like helpful to startup companies. So it's like, I mean, it was just so insane. Like, I'm like,
yeah,
what
we did.
the heck?
I think we might have taken like 1 or 2 months off from like our general cadence of like 2 deals a month. But we did that to do the Tech Startup Stabilization Fund, which I think funded like 20 to 30 new companies outside of our portfolio as
Yeah.
a response to the pandemic. So we were definitely really busy. I joined like right at the end of, or right towards the end of that process, and helped kickstart our kind of regular way diligence on new, first capital fund deals. And yeah, I mean, I think that it was great to see that impact, throughout the state in terms of, we understand that this is a difficult time, so let's see what we can do to kind of make sure that good companies don't go away.
Yeah. I saw you guys had invested in that Detroit Maid group. And I'm
Yep.
like so obsessed with that because I'm like, so I'm currently fangirling that organization. Shout out Danielle Parker.
Danielle. Yeah, there you go.
But I thought that was like so amazing because it was like they were doing like more house cleaning and then the pandemic hit. And then I don't know if like their initial thought when they were launching the business was kind of like eventually we want to be a platform for connecting people to house cleaning services versus like being directly involved in the house cleaning business. But like they pretty quickly kind of like transitioned. And I think that's like a good example that them and like Breadless would be like good examples of like companies that I don't traditionally think of as like, oh, this would be a company that would get venture capital, but are like super high growth types of companies. And then like the add-on of like being tech enabled with Detroit Maid Group, I was like, oh my gosh, like they are now like this platform and like doing so well and like all this like, and I was like, way to take advantage of the pandemic, man. That
Yeah.
is sweet. Like how cool. I love it.
Yeah,
I'm
no,
like,
we yeah, I mean, the Detroit Maid is definitely one of the ones that we, kind of continue to cheer on as they, kind of navigate like a difficult, like when you just say it, like, oh, pandemic starts, you're, battening down the hatches, and their business is about coming into your house. So it's like that
yeah,
is not a match, right?
yeah,
But they figured it out, and they are working towards a scalable solution that, again, you're right, at first blush wasn't venturable. And maybe that's another kind of Midwest quirk where it's like some of these companies don't feel classic venture capital style, but when you dig in and you work with them and you kind of sort out, the a plan forward, you can craft that case of like, well, if these things go right, then there is a flywheel here, and you can, kind of collect those venture returns, in a positive scenario.
yeah. We do like a ton of research on like the impact of the pandemic on like different types of businesses. And generally we'll have like some portion of that just being like, tell us how this has impacted you, just like in words. And I think it's like really interesting to see like compare like some entrepreneurs or some business owners who are like, oh, the pandemic hit and like, and then are listing off all of the things that they weren't allowed to do and that's why they're just not doing anything, and being like, they're not letting me do this and are kind of like, yeah, so we're not able to like earn any money. And then you see other people who are like literally in the same exact industry and
Yeah,
like are like, okay, yeah, we saw these things and we just figured out a new way and now we're doing awesome. And I was like,
yeah, I want to back that one.
I like love some business owners, man. I was like, you guys are so cool. Okay. So anyway, we'll just stop fangirling for a second. So do you have any guidance on companies who are kind of like, okay, we're thinking about raising our first round of venture capital, or maybe our next round of venture capital. Like, what is your guidance to those companies?
Um, Definitely do the research into who you're pitching. So if you find my information, or we meet at an event, or you get intro to me, and you want to like pitch ID Ventures, like I work for ID Ventures. I don't work for another fund that does something different. So we have a website you can go check out to make sure that we fall with that you fall within our general guidelines of who we invest. So just doing your homework to start, and then when it comes to pitching your business, I think there's the need to have, like, your deck needs to have obviously what the product is, what the service is, what the market opportunity is, and the particular problem that you're solving, maybe the competitive landscape. But again, let's like fine, like whatever, that's easy. But I think what does come, this is a people business, and we oftentimes, especially at the early stage where we are, there's no cash flows to discount, right? Like, I'm not taking my investment banking background to like do a full analysis of your business as if that's gonna inform my investment decision. A lot of times, like, yes, I need to do my homework on is this a viable market? Does this product seem new and different and interesting? Is there any defensible IP or patent work that's been done? But at the end of the day, like, if we can't invest in the team, then it's just usually not going to move past an initial couple of meetings. So and that doesn't mean that there's like a certain type that we're looking for, but it does, there are things that I think help, and that's being responsive, showing that passion that you have for the business, being honest. Like, these are like, I feel like these are obvious things, but they do matter. And it takes a while sometimes to develop that rapport with somebody. But I've definitely kind of shrugged off things that are maybe concerning about the underlying business, because I believe that the team can achieve those goals, and is up for the challenge. This is a hard industry. So I'm not sure if I'm exactly answering your question, but I am.
No,
I
I
guess
think
what I'm
that is really
I guess what I'm
helpful.
trying to say is like, showing that authenticity, that passion, and your competence is like paramount, right? Like, it's the thing that I will kind of constantly go back to. It's like, okay, this is going to be a difficult, problem for this company to solve. Do I think this team can do it? So, that's a really hard thing to quantify, but it does become evident, the more that the relationship, builds out. And I
Yeah.
am a very much like a relationship, VC, where I'm like, I need to be comfortable with that we can work together, because
Mhm.
IDV does not, kind of stop the communication, the correspondence after we write a check. We do our best to,
Yeah.
nurture our portfolio. So, if you're someone that I want to work with on a go forward basis, then great. Let's go do great things. But if you're, standoffish, not responsive, it's super defensive, not coachable, those are things that are going to, kind of preclude me from like wrapping my head around the broader opportunity.
Yeah. Um, I also hear a lot of people, I mean, like how you said a relationship business, like a lot of people frequently talk about just how small the investor community is. And I think like you can, if you have like one good relationship with one venture capitalist, like, and you can kind of gauge like, so who else in this is cool in this community and like who's not. And like you do hear the same names come up whenever I hear like people will say like, oh yeah, and then that I'll just like totally fill apart because of that dude or whatever. And you'll be like, it's always like the same names. And I'm like, okay, mental note, stay away from that person. Like they're not a friend.
Yeah. And the thing that I want to do, like the thing that I really enjoy doing, is like if we are early in a round or early with a company and they need help, filling out that round. And I really believe in the founder and the company. I love like calling our co-investing partners and people that we think would be, interested, and going to bat for that founder. And, I just did this for one. I'm like, you got to start paying me, because I'm like, I'm kind of helping you like fill out this round. But I love doing that because it's like, it helps validate our thesis and kind
I
of,
don't know.
you know,
Isn't there like a finder's fee? I mean,
I might have to sign some moonlighting agreement or something. But no, but I feel like it's a useful exercise to kind of be able to reiterate our investment thesis. It is helpful for the founder because we just generally have a broader Rolodex of VCs than your typical first time founder, and it obviously achieves everybody's desired goals. We get the round closed and the company starts operating and doing what they're supposed to be doing, which is not capital raising. So yeah, I love that. So if we establish that relationship and that rapport, and I believe in your company, and we get commitment from our fund, I'm more than happy to speak on your behalf, as you continue to raise more money.
yeah, and I think that I mean that's a commercial for ID Ventures for sure because it's kind of like you guys I think are I'll just say I think but I kind of know that you guys are like one of the most active investors in Michigan. It's like Invest Detroit Ventures, but you invest all over the state and you have like a gigantic portfolio and a gigantic network. And so it's like in Michigan, if people kind of are a fit for like your investment focus, like you have pretty much like the resources to be able to kind of say like, okay, if you're in our portfolio, we help you find this and like move on to the next round. And you guys know all of the other venture capitalists. You guys have a lot of ties in Chicago, elsewhere. And like, I feel like it's kind of, you want to get in good with Ben Bernstein. That's not
Well, I mean, I am not a team of one, but one thing that we I think are super intentional about is what you said, is kind of building out that ecosystem, building out that network to help both the folks that are in our portfolio and the folks that maybe aren't a fit, but we can still be a helping hand, getting them in front of the right person. I'll just do a quick plug that we just hired our first principal focused only on portfolio success. So we have 100 active portfolio companies that's a lot to
That's a
manage
lot
for,
of companies. That's so
yeah,
many.
for a
Like,
small team. So we just brought on Jeff Ponders as the person that's only focused on portfolio success and making sure that the people that are in our family, have what they need, to the extent that we are capable of providing that, to go raise capital, to go make a key hire, to solve a kind of hard problem that's kind of servicing. And so I think that just kind of speaks to our philosophy that we are more than just your capital provider, but we are kind of a business partner to the extent that you are open to that kind of relationship. But we have the resources and the people that know what they're doing and can kind of help out.
yeah, I'm excited to meet Jeff. I feel like I've met him before, but like his
Everyone kind of
name
knows Jeff.
sounds so
Yeah.
familiar. But I'm like, but then I looked at his picture and I was like, I don't think we know each other. And I was like, maybe I don't know. At any rate, I like to know everyone. That's my thing.
Well, that's also his thing. So you guys will get along fine.
Perfect. We probably do know each other. Are there any like cool events or programs that Invest Detroit has going on that people should know about?
Yeah, so we are. So at the end of 2020, we kind of authorized this new program that we're calling the FAM program. So it's funding access mentorship, and it's so we're normally at the like early stage pre-seed, kind of often pre-revenue, but usually kind of MVP, product market fit stage for a typical investment. But we are digging further upstream with this program for the kind of that post idea phase, pre-seed, that's targeted specifically at Black and Brown founders who generally don't have the capital that is associated with that stage. So that's usually like friends and family money. And obviously historically, those companies that are kind of being incubated at that stage have generational wealth to rely on, or networks that have kind of proven to fund those companies from what would be your kind of stereotypical founder. But from underserved communities, that infrastructure is less fleshed out. So we're kind of starting small, 10 to 25K checks to fund some early stage of development to get you on your way to seed money. So it could be patent work. It could be hiring your CTO full time. It could be quitting your day job as the founder to kind of get things moving on a more full time basis. It could be something a little bit more targeted, where it's like, hey, we're having this like UX issue, we need to hire a consultant. It could be something like that, and just trying to find those early stage, super early stage problems that often can leave a potential startup in the dust because they don't have the money or the resources to dedicate to that problem, and that's a kind of a gating item for them to kind of expand. I remember having like a early conversation early days when I was at IDV with a founder, Black founder, who said, people keep telling me to raise friends and family money, but my friends and family don't have any money.
Yeah.
And that was kind of like a funny like little aside that he said, but like that idea is super pervasive within entrepreneurism, right? Like the generational wealth and the wealth gap precludes startup businesses and potentially high growth startup businesses from even getting to the founder stage.
Yep.
So we're doing our best kind of small way, in the way that we can, to build a pipeline of companies that could use those funds, offering. So again, it's funding, but then it's access. So now they're in our portfolio, they get access to our resources and our network and our ecosystem. We try to do like a regular cadence in terms of setting KPIs, what we'll need to see for kind of what other investors will need to see for later funding. Performance metric, key performance indicators.
Yeah. I was like, KPIs, what's that?
What are those? Does your mom know what a KPI is?
Yeah, exactly.
Yeah. And then mentorship is the last one. So trying to match them up with someone that is either in that industry, in that, kind of selling through a similar channel. Someone that has been there, done that, maybe 2 phases ahead of where you are, to kind of match you with just another resource that's not us, right? That's not just us telling you what we think. Someone else that can kind of further validate or refute what we're saying and say, no, actually, no, you should do it differently. And just kind of broadening the the kind of village for these companies to to kind of break through.
Yeah, that is a lot of our research looks at that gap, that like capital opportunity gap, like whatever you want to call it, like right in the beginning stages. And it's kind of like, it's so interesting to look at, because I think it's something that like a lot of people don't really think about. And like when you look at like regions that have a lower socioeconomic status than maybe some other regions, and just that proximity to wealth or proximity to resources or whatever has such a long-term impact on business growth and like on the economy and the potential for the economy to grow in certain regions. So it's like if you look at some areas within Michigan where even small business owners, like during the pandemic, had, like you could even look at like restaurants or retail or whatever, where they, if you were in a higher socioeconomic status area, there were like local people are very likely to be like, oh, we're going to buy gift cards or we're going to do this or whatever to help our local small business owners. But then when you look at lower socioeconomic status places, you don't have things like that happening because the people locally don't have the funds.
Also struggling.
They don't have money. And then it also is like even non-pandemic times, you see like companies that if they have access to capital or, local wealth, and it's kind of like, I think it's like 46% of like initial funding comes from your friends and family. So if you don't have that, you're automatically 46% behind everybody else. And so then it's like, you look at the ability for business owners to like offer benefits like healthcare or anything to their, or even like kind of like higher wages to their employees, like that impacts that, which then has like a continued impact on like
on the community
in that region. I'm just like, ah!
Yeah. So again, we are
so I'm super excited about that.
We're doing our small part to kind of attack that, in a way that we can. Because everything that you said, like all of those kind of structural factors are at play. And if we can get a handful of companies to, I feel like one of the things that, these communities are struggle with is feeling comfortable to take risk. And because there's the what if, right? What if it doesn't work? Then I'm like, I'm on the street, or I'm not, I'm back to square one, and there's not a safety net. So if we can provide some resources, capital, and access to, to just have them be a little riskier, take a little bit more risk and go for it, then hopefully that leads to some positive externalities, kind of hitting on some of those issues, more jobs in the coming to those communities, and then that affects the broader community around those companies and those people.
Yeah, that's awesome. I like that. I'm excited to see more of that.
So yeah, we've done one. We have another one kind of pending documentation right now. So we invested in a company called Frismo, which is our first FAM program recipient. They do kind of financial literacy and like a debit card for families within a school system, and the kind of gross up amount that you spend that debit card goes back into your local school system. So it's kind of an interesting kind of community banking, financial literacy play. And they have a pilot with Detroit Public Schools. And then we have another one coming hopefully this week that we can announce shortly. So yeah, we're moving on those.
Awesome. Is it Frismo? Frismo?
Frizzmo.
Oh, Frizzmo. Okay. Cool. And then, so now that the end of the pandemic, now will be like more fun. So now that like the end of the pandemic is in sight, I mentioned earlier how I'm like kind of thinking like, okay, how do I like readjust to like hopefully we're moving out of this. Like, what are some strategies that you've kind of found that have worked best for you to like maintain a work-life balance, and like what are kind of things that you're looking to do to like heal your life?
Yeah. It's I don't know if I don't know if anything that I have is like super groundbreaking. I mean, we try to do like the little things with my wife and with the kids, like just getting outside. It's hard to do that in Michigan, but I think my wife was like adamant. It's like 25 degrees and we haven't been outside all day, and bedtime's in an hour, so let's just go walk around the block. So we've done that, and I think it's helped a little bit. Um, seeing family that we haven't been able to see as much, through the pandemic, is definitely, kind of on the list. My son, my oldest, is at an age where he can start, kind of engaging more in sports and, kind of doing some of those activities that, we've kind of shied away from, he hasn't been old enough yet. So he turns 4 this summer. So we're excited to kind of get him a little bit more active.
What sport are you thinking?
He's really he's like, he won't stop running around, so he thinks he's lightning. He thinks he's Lightning McQueen, so he wants to be like a race car driver. So I'm thinking like immediate, like I can't put him in like a race car now, but I think immediately like soccer is good. Like, sure, go run around, kick the ball whenever you want, and that, you can go crazy. So that's like probably the first entry point, no pun intended.
Everyone always
do I win?
Like it gets in there. People always do that, and then they'll be like,
no. So there, yeah, and then so yeah, stuff with the family, and then I think with work, we have discussed, ways to start re-socializing with each other, and I think for me personally, it'll be good to start, going into an office community and seeing other people, even if I'm working with them or not. Like, just, there's another human over there that's being productive. Let me try to do the same thing. So there's a little bit of that, and just getting back to those things that you liked about work, before all this happened, where it's like, hey, we should do a happy hour, or we should host a barbecue. We've got a lot of new people on the team that have never come in contact with each other, and it'll be exciting to kind of have that human connection again.
Yeah, that will be cool, and hopefully I'll get to hang out with you guys all soon.
Yeah.
And then what's on the horizon for you, sort of like personally, professionally? I feel like that program and doing all the things.
That we're rolling out like a volunteerism effort through Invest Detroit to do some financial literacy focused on entrepreneurism to some Detroit students. There's a program, they range from 14 to 24. They get internships through this program and some programming on top of that. So we're going to layer in just like a little 4-part module on entrepreneurism, raising venture capital, small business, loans and stuff. And then also having our real estate folks chime in. So that's something that we're working on. Yes, we just hired a new associate. So we're really excited about growing our team. We are actively fundraising for our 4th fund. So that has been, in many ways, a headache, as well as a kind of a new experience. I've never fundraised before, so I'm learning a ton. Learning a lot about what is important to lawyers that may not be as important to me, but it all kind of works together. And personally, going back to California in June for some vacation time.
Oh, nice. And then your family still lives there?
Yeah, mom and dad still do. And like I said, Lightning McQueen, big influence in our house. So we're going to Disneyland.
Oh, fun. That Disneyland out there, I really like. It's like a manageable size.
Yes.
My brother used to work for Disney. And so then like we would be able to go to the to that one. Like whenever I went to visit him, we'd be able to go to that one, and like they would be like, oh, he had like the card that showed that he like worked at the studio, and so the people would just be like, oh my gosh, like you can come right in, and like we got special parking. Like I was always like, oh, look at this, it's very famous.
Yeah.
But yeah, that was like, but I always thought that one was like so fun because it's just like
Well, that's the
not
one I grew up going to, and it
yeah,
was yeah. I mean, yeah, it's great. So I'm looking forward to taking the boys there,
yeah,
and yeah, well, that's all we got.
yeah. And then you guys are going to the pool. We go to the same pool, right?
We go to the same pool, so I will see you at the pool
Yeah.
with your kids, and
Yep.
you know, I'll do the like, oh, there's Emily. No, I'm just kidding. I will.
That's what people do at that pool. I'll tell you what. Really like someone from work wearing their bathing suit. It's very awkward. I
It
think
could be awkward. It could be awkward, but it's fine.
it's my life. Um, cool. Okay. Well, thank you so much for joining. And everyone, you can check this out. We post these episodes up on entrypointmi.com, and everybody can check out past episodes. Next week, we have Elizabeth Edwards from H Ventures joining us, and she's like really cool, and they focus on consumer brands. So I'm like really excited to hear a little more about all of those things. So yay. Okay. I will talk to everyone soon.
Bye.
Bye.